Hey everybody, I'm David with Bolivar Live, and once again we're here talking with Stephanie with Service First Mortgage, a weekly show that we're going to be doing. Stephanie, thanks for joining us this morning. Um, we started these shows last week. Y'all are part of Team Bolivar, and we're really going to get into mortgage finance. And I've had the pleasure of having dinner with Stephanie once or twice and listened to some of the, I call it creative financing. She calls it something else. But, interest rates right now are seem to have raised a flag for a lot of people. And I can remember back when interest rates, when I was buying my first house, it was like 14 or 17%. Now, homes were a lot cheaper back then, but let's talk about how the interest rate works, how it goes up, what drives it up, and what keeps it down.
Absolutely. Well, thanks again for having me on. The main things that, when we look at interest rates, there's a lot of things in, let's say, the media and what people expect, and they think rates go up when they don't. So the main thing to remember is articles and things online are, of course, a little bit delayed. We'd love to have real time, but things by the time they publish, our rates are changed. So the main thing we always tell people on rates is they change every day. It's kind of like the stock market. So we watch indices and what rates do and mortgage-backed securities all day long. So it's number one, we handle that for you. So if you ever want to know what rates are, how to get the best rate, what all of that we do in the back end to ensure our clients get the cheapest rate available in the marketplace, that's already part of my job and I do it every day. So we like our clients to understand kind of what happens and why and where they are, but hire us and we'll make sure you get the best rate in terms of, what happens on that end. So one of the main misconceptions though, is we've seen a lot of course, rate increases with the Fed. So the Fed comes out and we get these articles that say that the Fed has raised rates. People automatically think that mortgage rates increased that day. It's actually false. There are other things that do directly tie to what we call the federal funds rate and prime that will go up that day. So like shorter term things like credit cards, things of that nature, some commercial loans will immediately have impact with that change. Mortgage rates though are actually based on what forecast of what's happening. So when they already know that the Fed's going to raise rates before they do. So before the Fed raises rates, mortgage rates have changed months before that has actually occurred. The big thing that we watch for mortgage rates is what's expected and looking outlook forward. So for example, if the Fed comes in and raises rates a certain percentage, this last time they raised rates 0.25%. If the expectation was a quarter, generally we'll have nothing happen with mortgage rates that day. It's already factored in pricing. But let's say that they raise rates a half that time. We would actually have a sharp increase immediately after that news. Or if they didn't raise rates, we would have a decrease. So what's expected changes, then we'll have some movement. Big picture, and again, I don't like to go too technical on this, but big picture of why this is happening, I think a lot of people have heard this, is inflation. So the Fed wants to bring inflation down, and that's why they've raised rates. So this last time they think we've kind of come to the tail end of raising rates, and we're expected to hopefully decrease. So we don't know when, but the main thought process and big picture is if inflation cures, rates drop. Okay. And when we say if, it's not an if, it's when. So when inflation cures, rates will go down. And that is pretty much a fact. We just need to know when.
So if someone's come to you and they're scared of it going up and y'all get a rate locked in, and then before they close, the rates go down 0.25% or a couple points. Can that be redone so they can get the cheaper rate?
Yeah, we have a couple of different products available in the rate realm to kind of go into that. So number one, generally you lock in a rate when you get a purchase contract. So if you're doing a purchase or a refi when you're ready to go forward. We do have a program called Lock and Shop that we can lock clients in during the home shopping process. So we can back up, and that is available. Then we decide if you want to lock in, and we do have a float down during the loan process. So correct, if we lock in a rate and rates drop, we have a one-time float down to current market. So that's a good option. And then what we also announced and added to our programs this last year was what's called a rate protection. So the big thing is people say, well, I'm going to wait to buy a home for rates to drop. I actually think that's not a good idea. And that sounds very odd. You're like, well, I want a lower rate. Why would I not wait? So if we wait, what do we have sitting on the sidelines is so many homeowners that would jump in the market. You're going to pay more for your property and have more buyers in the market if you wait to buy a house until rates drop. So we actually say buy today. And then we have our rate protection program where we cover a lot of the expense. We have cover our lender fees, the appraisal, a bunch of the little items. You get a 50% discount on title, and we'll drop your rate when they drop. Like I say, when, not if, when they drop here in the future.
Okay. So there's protection about rates going down. And, I think everyone got spoiled over the last couple of years. And then all of a sudden it went up, and it's sort of been, from what I've seen down here, and this market down here too, because you're in it with both homes and business. Everyone sort of like, it was sticker shock, and all of a sudden, whoa, wait a minute. When in reality, we were floating on a cloud, in my opinion, for about 2 years. And, it slowed some things down. Has it slowed that much? Are people just shopping more for the right home, you think?
It depends on the market. So we do a lot of different things around, not Texas mainly, but we do stuff in other states as well. And I think if it's a bigger second home market, or if it's a primary market or different things, we're seeing different items, is a buyer's market or seller's market across the board. There's a lot of markets in the country that we have a shortage of homes still. That really, no matter what the rate is, buyers, there's multiple offers. I would say, Bolivar specifically, it's actually a very good time to buy if you're a buyer. Rates have come down from the highs. They're not all the way down to where we forecast them to be, but be able to jump in now, you might get a good price. Prices are lower, that's Best Realm. She'll talk about your home prices better than they were in 2022. And you can still buy a property as an investor in cash flow. So some people think that's not possible, but in Bolivar, we took real life examples with current rates, and you can absolutely cash flow and still get a great property, be able to go to the beach all the time, right? And then rent it when you're not there. And then we can use that rate protection to show you an upside that you'll cash flow even more potentially when rates drop, but it still works with current market rates. And like you said, historically, we're in the 6s and some loans are in the 5s. So we still have those. That's still a good rate. Yeah. Just got a little spoiled with those 2s. I wish they'd come back, but I know we're going to drop. I don't think we're going to go in the 2s again.
How much does credit play a role in your interest rate? And this may be off topic a little bit, but how much does credit play a part in it?
Actually, a really good question, because what happened earlier this year is we keep saying 780 is the new 740. It's the tagline I like to use. And why that is pricing used to stop where you get the best rate at a 740. To get that same rate, now you need a 780. To get a 780, there's not as many people that have that. And you have to be a little bit intentional. You have to be looking at credit and being, okay, what are my credit card balances? When do I pay what? So when we look at, when we help clients, we always call our credit maximization. Can I give you that little suggestion that boosts you up that 40 points? Because there is a big difference between having a 740 and having a 780 or 720 or 700. And I think there is a misconception out there that I have a 700, I get the best rates. In my mind, you should, but the government, the entities that make our pricing don't think so. Right. Also, down payment has a big impact with all of the changes that they did make earlier this year. So 20% is actually one of the highest interest rates. Seems very not logical, but that's the case. So sometimes we'll give alternative options of 25% or 15 or 10 to strategize to be able to give you what the best rate is. And I think that's what's super important too, is a lot of people say, well, I'm just going to go online and get my own loan and click this button. A computer can't tell you all this. We're going to guide you and tell you how to save the most money on your house.
And, uh-oh. You there?
I am. I'm here.
Hopefully my computer just blacked out. Did the screen black out for you?
No, it didn't.
Yeah, my screen just blacked out. Can you go in and help people and say, look, if you can pay this down, say credit cards or a car loan, if you can get this down, give yourself 60, 90 days and get this paid off. Is that enough to turn around and help people, maybe get that better interest rate?
Absolutely. And sometimes we can do, some things are longer. So it depends obviously what a balance is. Sometimes it could be as simple as, a medical collection that they didn't know about because, that got popped on there. There's a lot of things in that realm.
I didn't think medical collection could go on your credit.
Some of them can, but the good news is we can get them off.
Oh, okay.
And knock on wood when I say this, but we're 100% for giving people over the last 9 years, giving them advice on medical collections and getting them off the credit report if they're there. And then under $500 did stop reporting this last month or so, a couple months. So that's great, but there's still going to be some collections on there. Okay. Also just balances, like you said, and being strategic with it. We can actually send an update to the bureau and sometimes get people's credit report updated in a day or two. So we can do it a lot quicker than clients doing it on their own.
If this is a second home versus an investment property, how much difference is there in the interest rate and in what you have to do and what they need to do?
Great question. So last year, big difference. Current, as of some changes that happened later mid last year and into current, second home and an investment property actually have the same interest rate.
Oh, do they?
I think they caught on the, hey, it's my second home, but I'm going to Airbnb it on the side. What is this? Because a lot of those do with Airbnb and VRBO and short-term rentals, a lot of those have merged. A lot of people do rent their properties when historically they might not have. And so in the back end, all the investors and Fannie Mae came in and said, look, it's going to be the same. Benefit to a second home, you can do 10% down, and in investment properties are going to start at 15%.
15%. Yeah. I know down here that's and I think you're involved with it. Vacation rentals is a big business, and some families, I saw it after Ike. They never rented their home before, but they lost their home in Ike. So instead of a 700 square foot home, they came back with a 12 or 1400 square foot home. And a lot of them told me, we're going to rent it until we get it paid down, and then we'll enjoy it ourselves, and they used that income, especially back then there was a shortage of homes. They used it to help pay for the house, the offset difference from what their insurance paid and what the new home cost.
Well, that's what's powerful to me about a second home and some of the short-term rentals, or you can buy a property in a vacation area and be able to enjoy it. And then still,
like you, right?
Right. I know my properties. I joke with Beth. I'm like, those are not good examples of money making properties because I go there so much. Like, let's take all the weekends that I used it and then add what I could have made. But to us, it's a little bit different. We love it. I've got the kiddos. We all go hang out. There's not many places, I'd say, in the country that you can get beachfront property at the price you can here. And
I still say it's been discovered, but I still say it's a secret, because even 200 miles down the Texas coast, Rockport, Corpus, even down Surfside, once you get past Surfside, all that's gone up, especially the Rockport area. And then you go into Mississippi and Alabama, and we're on the same Gulf. And the price is it's crazy different on some of it.
Yeah. And beachfront, availability of beachfront or second row, something close where you can hear the water. I tell people, we're licensed in Florida. We do a lot of loans there, and it's got a different vibe. There's a different reason you go to Florida. I still love it. But I can't buy a beachfront property in Florida. I mean, I don't have $20 million or whatever they are, 10 million bucks. You can do that, and it's just a different vibe that I can sit on a porch. I can hear the water. I can walk down. We have an 8-month-old, so I can walk him down to the beach. We can come back. He can take a nap and still see the kids at the water. I mean, you can't do that in a lot of the other markets, and so there's so many benefits to Bolivar personally that the reason we own houses there.
I just saw when I was skimming through some stuff yesterday. We had a beachfront, and I'm using this. You said, $40 million or whatever. I just saw a beachfront that sold for 1.4 that was probably 2,500 square foot, I would think, beachfront landscaped. And I don't know anywhere else on the Texas Gulf Coast that you can buy a house, for 1.4 that's beachfront. I would imagine it was about 2,500, 2,200 square feet. Mm-hmm. It was just beautiful, and that's one of the things and we had a lot of people discover us, in the last year, or 2 years really. So
kind of like those articles, stop writing them, no one else come down here, right? So the property values stay low. But then on the flip side, keep writing them, the property values go up after you buy, right? I don't know which one.
Right. I mean, a lot of people are fighting property taxes right now. Everyone had sticker shock on that, and I think the county probably said, well, this is what they sold for the last 2 years, but that's not reality in my book. So, well, if people want to get a hold of you to talk more about, maybe they're looking at getting into investment property or wanting to buy a second home, what's the best way to get hold of you?
So like I said, phone, email, text, whatever's best. On our website down here, it's actually stephjohnston.com. So just Steph, and then Johnston's got the T in there. We like to be JOHNSTON. That has all contact information. Okay. Or give us a call. It's 214-576-2934. But any way that works for you guys, that should be on Facebook, whatever. Happy to help and make it a dream to get a beach house down here in Bolivar or wherever else.
Still time to get it, enjoy it this summer too. If you found, they can call Beth to find the perfect home, and then call you for the financing. And everyone's spending July 4th or maybe Labor Day weekend in their new beach house down here.
We can get some things closed. Sometimes, I mean, it depends on the third party items, but we had some this month. We closed in 2 weeks. So
oh, did you?
You can get in quick.
You can turn it quick if you need to, huh?
Exactly. You want some stuff for June? We're good to go. So get you closed here.
Okay. Well, thanks for joining us. And, we're doing this show now. We try and do 2 or 3 a month talking about finance in homes, whether it's investment property or your second home. And Stephanie's, come on to Team Bolivar. We're also going to be doing some shows in the future with Beth where it's 3 of us, and probably the 2 women will be talking business, and I'm just going to be listening. So join us every Friday or Saturday afternoon, and these stay up, and you can always see them on Bolivar Live TV. Anytime, just go to BolivarLiveTV.com, look for the Johnston team and mortgage, and you'll be able to see all the shows we've done. So Stephanie, we'll see you next week. And until next time, I'm David with Bolivar Live. Y'all have a great day, great week. Come see us. God bless, and bye-bye.